Yo, what's good, Stock Talk Daily crew? Buckle up, because Opendoor Technologies, Open, is serving drama on the stock market stage. Did you know this real estate disruptor just spiked 43% in a single day? Yeah, you heard that right. Today, we're diving into whether Open is your ticket to the moon or a trap waiting to snap. Stick around to find out if this stock's got the juice to keep climbing or if it's about to hit a brick wall. Alright, let's check the pulse. As of today, July 25, 2025, Open is trading at $3.15, and let me tell you, it's been a wild ride. This stock's been closing green 13 out of the last 14 days, 93% of the time. It's flexing like a bodybuilder at the gym. Yesterday alone, it surged 43%, and posts on X are screaming it's in an ascending channel, aiming for $4.50. But here's the suspense. We're dancing near a key resistance at $3.30. Will it break through and party, or get rejected like a bad Tinder date? Let's find out. Time to pop the hood on Open's financials, and we're keeping it real with some spicy analogies. P/E ratio. Trailing P/E is sitting at a hefty 50, meaning investors are paying $50 for every buck of earnings. That's like buying a gourmet burger for the price of a Tesla. Forward P/E. Analysts are betting on growth, with a forward P/E of 25, still pricey, but it's like the market's saying, this burger's gonna be worth it next year. EPS growth. Earnings per share are projected to grow 30% next year. That's like Open's profits hitting the gym and coming out shredded. ROE, return on equity, at 10%, it's decent but not blowing the doors off. Think of it as a solid B+ student, reliable, but not valedictorian. Debt to equity. A high 2.5, which is like carrying a big mortgage on a fixer-upper house. Risky, but manageable if the real estate market stays hot. Current ratio. 1.8, showing Open's got enough cash to cover its bills, like having enough gas for a road trip without sweating the next fuel stop. These numbers scream potential, but that debt's got me raising an eyebrow. Let's keep digging. Grab your binoculars, because the chart's telling a story. Open's got support at $2.80, a level where buyers have swooped in like superheroes saving the day. Resistance is at $3.30, and if it breaks that, we could see this stock rocket to $4.50, as some X posts are hyping. But if it fails? Watch out for a slide back to $2.50, where it could lick its wounds. This is a high-stakes tug-of-war, folks, bulls versus bears, and the rope's tight. Let's geek out on the charts. The 20-day moving average is at $2.95, and Open's riding above it like a surfer on a wave, bullish vibes. The 50-day MA at $2.70 is also in the rearview, confirming the uptrend. But the 200-day MA at $3.50 is the boss level. If Open clears that, it's game on for the bulls. If not, bears might growl and push it down. Right now, the momentum's screaming up, but that 200-day MA is the final dragon to slay. Last quarter, Open missed earnings expectations, reporting an EPS of 15 cents against a forecast of 10 cents. Ouch, that stung. They also yanked their forward guidance, which spooked some investors. But here's the plot twist. X posts are buzzing that Q2 earnings, dropping in 2 weeks, could spark a reversal if they beat expectations. The market's got high hopes, and the pressure's on. Will Open deliver, or is this hype just hot air? Open's playing in the real estate tech sandbox, competing with big dogs like Zillow, Z, and Redfin, RDFN. Zillow's got a stronger brand and a P/E of 30, while Redfin's leaner with a debt to equity of 1.2. Open shines with its iBuyer model, buying homes direct and flipping them, but it's bleeding more cash than its peers. In a hot housing market, Open's got an edge, but if interest rates climb, it could get squeezed like a lemon. Compared to the industry, Open's riskier but has higher upside if they nail execution. Wall Street's got a mixed bag on Open. Analysts give it a moderate buy rating, with an average price target of $4, implying 27% upside from here. Some bulls see it hitting $5.50 if earnings pop, but bears are grumpy, citing that high debt and spotty earnings history. Me? I'm skeptical of the hype but intrigued by the momentum. Analysts are betting on growth, but they've been wrong before, so take it with a grain of salt. The X crowd is lit about dollar open. Posts are screaming about that 90% one-day spike and 300% weekly gain, with users like @StockLove1 calling it a bottom at $3 and predicting $4.50. Dark pool data shows institutions loading up, and net options flow is bullish at 81/100ths. Reddit's got some FOMO, but there's chatter about a pullback if earnings disappoint. Sentiment's hot, but it's like a party that could get crashed if the DJ, earnings, plays a bad track. Risks. Near term, Q2 earnings miss could tank the stock back to $2.50. Long term, high debt and rising interest rates could choke dollar open's cash flow, especially if the housing market cools. Catalysts. Bullish. A strong Q2 earnings beat could push dollar open past $4.50, especially if guidance is reinstated. Bearish. Macro headwinds like tariffs or Fed rate hikes could spook investors, dragging dollar open down with the market. This stock's like a race car, fast but could crash if the driver slips. Flashback to 2021. Dollar open was a SPOC darling, hitting $30 before crashing to $1.50 in 2023 when the housing market froze. This 300% weekly surge feels like 2021 deja vu, but here's the lesson. Momentum can fade fast if fundamentals don't back it up. Investors who chased the hype last time got burned. This time, keep your eyes on earnings and debt, don't get caught in a FOMO trap. Here's how to play dollar open based on your risk vibe. Aggressive. Buy now at $3.15, aiming for $4.50 on earnings hype. Set a tight stop loss at $2.80 to limit downside. Moderate. Wait for a pullback to $2.95 near the 20-day MA. Enter with a target of $4 and a stop at $2.70. Conservative. Sit tight until Q2 earnings. If they beat and guidance is strong, buy on a dip to $3 with a $3.50 target. No matter your style, manage risk like it's your job, because it is. What's your take, Stock Talk Daily fam? Are you riding dollar open's wave to $4.50 or waiting for a dip? Drop your thoughts in the comments, and let's see who's bullish, bearish, or just confused. Smash that like button if you're learning something new today. Mark your calendars. Dollar opens Q2 earnings drop in 2 weeks, August 8, 2025. A beat could send this stock soaring, but a miss? Yikes. Also, keep an eye on Fed rate decisions in September. Higher rates could pressure real estate stocks like dollar open. And don't sleep on housing market data. New home sales numbers next week could move the needle. Let's recap. Dollar opens on a tear, up 300% in a week, trading at $3.15 with momentum screaming bullish. Fundamentals show promise but carry debt baggage, and the chart's flirting with a breakout at $3.30. Wall Street's cautiously optimistic, but earnings are the make or break moment. My take? Hold for now, let earnings clarify the picture. If you're in, lock in profits and watch that $2.80 support like a hawk. Legal disclaimer. This is not financial advice. Always do your own research before investing. Past performance doesn't guarantee future results. If you loved this breakdown, smash that subscribe button, hit the bell, and join the Stock Talk Daily crew for more daily market heat. See you tomorrow, fam.